Is how do I tax the little bugger? There are times when a sole proprietorship, I'm going to set up, let's say, an LLC, but I'm going to tax it as a one-person LLC, meaning it's disregarded. All the taxable events that happen in that business are going to flow down to me individually. It's going to show up on my individual 1040 Schedule C. It's a very simple way to run a business. And again, for a small little business, a little bookkeeping, a little consulting business, maybe I'm doing some IT work for some of the neighbors and friends, and I get paid on the side. I do a little leather working, or I do a little, I've got a little talent. I'm maybe a piano teacher. Could simply be an LLC, so I've got corporate veil protection. If something happens in there, they can't come after me. But I don't have a lot of tax perks. There's not a lot of money going into that, and so I set up an LLC taxed as a sole proprietorship, and that's a very common way to do it. However, once you start making money and you start looking for more tax perks, then almost always we would take that LLC or that business, and I'm going to tax it now as a S corporation. The benefits of an S corporation is in the first couple of years, if you're losing money, it's kind of like a sole proprietorship. That loss comes and affects your individual 1040. A C corporation, however, is very different. It's a separately taxed individual. If there's a $20,000 loss in there, that loss would roll forward to next year and next year and next year until you can recuperate that loss. The first $20,000 you make next year, I don't have to pay taxes because that loss carried on over from last year. That doesn't work in sole proprietorships, partnerships, and S corporations, where that loss would come down, that $20,000 loss would come down and it affect my personal taxes right now. I could use that maybe to offset some W-2 income, other businesses that I have. So there is sometimes a reason to tax your business as a sole proprietorship or an S corp. C corporations are different. A lot of people are very, very afraid of double taxation. Oh my gosh, what if the corporation makes money and I declare a dividend? I don't wipe it out at the end of the year. I have a lot of income, and then the corporation is going to pay taxes. Right now the rate is 21%. And then when I take money out personally, I'm going to be taxed on that. Well, first of all, the question is, why would you ever do that? If you're going to take money out anyway, take it out at first and only be taxed on it personally, not corporate, pay the taxes and then do it. We've seen businesses that do $20-30 million a year that year after year don't make a profit, and so that's very common. In fact, so there's a reason for all.
Your car warranty's expired, Don.
My car warranty well, that was certainly worth taking the call for that. Sorry. So S corps, C corps. If you have questions about which you should be, most small businesses today are set up as LLCs, and then we look at what type of business you have, and we look at how much money could we use an S corporation to reduce your self-employment taxes. Cool. Could I use the C corporation because I'm a real estate investor perhaps, and I want this to be a separate tax return. If I'm going out and looking for new money, and the banks are always, if you're looking to borrow money, a C corporation isn't going to be opened up to an individual tax audit. If the bank say I want to buy a piece of real estate and it's going to cost a couple $1 million, and I want to get a bank loan for that. If I'm doing that out of an S corporation, and I've got several S corporations, the bank is going to want to see the tax returns, not only individually, they're going to want to see all my partnership and S corporation tax returns as well. And all of that will be determined whether I get the loan or not. If my sole income is coming out of this C corporation, Picture your individual 1040. You're going to say all your income from W-2 sources. That's good, but that ends. That the bank's not going to want to see where it came from because it's none of their darn business. So we look at a lot of factors in determining how you should be taxed.